Hope everybody's having a good weekend so far, and I hope everyone can hear me. Let me just quickly check my sound card and everything is okay. Um, all right. Uh, okay. All right. Okay. Yeah. So guys, happy Sunday. Hope everyone is doing good.
Yeah, happy Sunday to you.
Huh? Oh, thank you very much. Uh, okay. So I'm just gonna jump right straight into it. I don't want to take too much time today. I'm actually you know, trying to balance quite a few things at the moment. So, straight up, we're gonna go and check. We check the seasonality, then we check COT report and probability to see what's going up. A lot of people in the crypto market, a lot of them are not talking about it anymore, and I can only, I can only think why a lot of people are not talking about it. A lot of people have lost money because they weren't paying attention to the signs. The big boys are actually manipulating. Uh, Guys, I'm just gonna mute everybody for a second, just don't have any noise in the background. Yeah, so a lot of people lost money in the crypto market because a lot of people didn't pay attention to the signs. The big boys are coming in and raiding, pretty much raiding everybody out of their money. It's called ivory robbery anyway. So steal from the poor. That's what's happening. Steal from the people that are impatient. To put in more logical term. So, but today, we're not going to look into crypto market. I haven't actually done any analysis. I'm just going to do analysis with you guys right now from the get go. So, first things first, check the COT report, see what's up, and see, what might be in alignment for us today or the week to come. So, this got released last week, so that's fine. So, from the gold, we see the commercials are having a little bit of position to the long side, taking out positions from the short side. Now, I'm not really satisfied with this amount that they're adding into, but let me just look at the seasonality in terms of gold and let's see what gold seasonality is saying. If gold actually gives us that uh, sign that it's about to go up around this time, it might be a good investment to go into. Uh, you know, but from what I'm actually looking at, might not be the ideal way to go at the moment. Okay, I mean, looking at this anyway, looking at what I see, what the commercial people are looking at, they're probably looking at the small seasonal move that's going to happen, and they probably have more information that I do, but they're probably banking on this happening. But I can see from the commitment right here, they're not too committed into the buy, which means that they're somewhere on the fence, saying that this might happen, this might not happen, and you can see the previous 5 years up until 2017, had that little bit of that drop, that sharp drop on the 14th, which is tomorrow. So what we can actually do is to assess what gold has been doing. Let's see what gold has been doing. Let me try to get a template. All right, let's see what gold has been doing. Has gold been following, following the seasonality? If gold has been following the seasonality, then I might actually look to consider going on the buy. I mean, just looking at it, 20 EMA has been a dynamic support keeping gold, from falling. It's rejected it right here, rejected it here as well, rejected it here. It might break it. Just from the looks of things, it might actually break it. So let's see. Yeah, it might actually really break this one. But let's look into probabilities for gold for a second and see what's up. It's quite hot in the UK. I gotta turn this stuff on. Wow. Um. So we in June, right? And 14th, right? Okay, it does actually give us that buy power for 3 days up until the 16th. Now we have that alignment with the COT. We have that alignment with the seasonality, but not fully. And then we have the alignment with the probability, which gives us 57% chance of a buy. Now keep this in mind. Because of this alignment with the seasonality isn't full. It's kind of a medium-sized risk trade, which could be traded, with a bit of caution. So, what I would personally do in this scenario is this. I'm going to pull up the calculator just to be, for the guys that don't understand, that haven't seen me done this in a while or never seen me do this before. You know, there's a way that I normally go around this stuff to ensure that, you know, I don't get caught out on this trade. Just in case I don't, I trade this and this want to start going south against me. I want to have kind of like a range in mind, or an average in mind before I go into the market. So because the market is telling me to go in tomorrow, so and to buy tomorrow. So what I'll have to look at is what's the wick like for on a weekly basis. So if I'm buying, what's the average wick on a weekly basis of the previous 5 candles? That would give me an estimate of what to look for in terms of pullback. You understand? So, I mean, with these ones, for example, you have to ignore the last figure at the back of it. So, eh, we're focusing just on the buy candle, the previous 5 buy candles. So, what I'm gonna do is keep in mind it's still a medium-sized risk trade, and there isn't any real spread on this because real spread, gold is the base data for it to generate the if an asset is gonna go up or down. But we can use USD JPY for the base data in this regard. But let's just do this for now. So in this, I'm gonna do 94 pips plus 1 pip plus 248 pips plus 18 pips, and then I'll plus that by 191 pips. That should give me 552. Right, I'm gonna divide that by 5. That'll give me 110.4. So on a weekly basis, I would like this asset to pull down at least 110 pips, pull down from where it currently is. So if I go on the daily chart, for example, I would go up to mark somewhere around, somewhere around here. Okay, so let me get that 110. So somewhere just slightly below here. Right now, the main reason I chose this on the weekly is this: it's the start of the week. If it's the start of the week, right, you want to focus on the weekly. If it's somewhere in the middle of the week, you can then look at the daily average. But also, what we can do is also look at a daily average to give us a range, right? It will give us a range between here, and then when price only gets to between that range, that's when we're looking to actually go for the long in this trade, right? It's just an average, just simple mathematical calculations. The market is practically mathematics. So you want to look at those averages to give you a kind of a fair point of most likely where your entry is going to be. And if price gets to that zone, that's only when you look at it. And if price does not get there, you just don't pay attention to it at all, you know, until price gets there. So in this regard, for example, I think if I'm not mistaken, I'm just going to have to pull this down a little bit. That's 188. Pull it back. So I'm going to do 188 plus 97. So I'm just looking at the buy candles only, guys. Plus 151 plus 56 plus 12. So that should give me 1, 2, 3, 4, 5. So that's 5, and that will give me 504 pips. I divide that by 5. Uh, uh, 504 divided by 5. So that'll give me 100 pips, 100.8. So about 100 pips, or 101 pips. So it's literally a very, very tight range. I think it's very, very tight range. So I can actually leave my weekly alone, or I can say somewhere around here. I know that this might not be totally accurate, but so I'm gonna go. Yeah, so somewhere I'm just gonna go slightly lower than here. So somewhere around here will most likely be where I want to go into the market. If price doesn't get to any of these two zones right here, I do not go into the market. Now keep in mind this is not fully accurate because of it's giving me 100, if I'm not mistaken, 100 pips, and the other one gave me 100 and something. Right. So price is actually meant to be between those two, but because of the difference is not that much, so I just created a range below right here. But ideally, where I want price to get to is around here, so about 109 pips, 108 pips away, or 107 pips away from where price is currently at right now before I actually consider buying. And even if you're looking at this, you can see the 200 EMA right there. So price is most likely going to get to 200 EMA at some point, because like a magnet, price is always going to come back and retest this at some point. So you don't want to get caught out. So I personally will wait. And even by looking at this, let me delete this indicator, right? So it doesn't look all messy. Just by looking at it, you can see it's a support region right here by the left. You know, prices actually used this region already as support before. It used this as support right here, and it's most likely going to use it for support right here again. So ideally, we'll want to see something similar to this. Price comes down all the way, spikes down, clear people out, everyone in at this point, then go back up. And the move is only going to last, if I'm not mistaken, the move is only going to last about, it should last till on the 19th, right? Maximum. You know, so but according to probabilities, you know, it should last till about Wednesday. So in that regard, what I can want to see is only price gets here, and I probably want to exit somewhere around here. Now I chose here because of this is just a resistance zone. You know, price, it could be here, it could just be at the tip right here. Gold always like to go to the tip in most cases, I've noticed anyway. So I'm just gonna choose here the resistance point that I can find. So ideally, what I expect is about 140 pips profit, 142 pips profit on gold. Now there is a trick to find out a little bit more about what's going to happen, and that's with the wheel spread. A lot of people might not know this or might not have looked into it if you have the wheel spread, but you can actually change the base currency for wheel spread. So in this scenario, for example, is gold. I can change that to USD JPY. You can play with it and see which one works best for you, but I presume gold works best for the FX, and then USD JPY, because it's correlated with gold, it gives me more of an indication of what's going to happen. So with wheel spread, what I can see from a USD JPY wheel spread is it's giving that buy. It's coming. I mean, right here, it gave that signal of a sell. A sell is coming, and then price did drop and give that buy. And right here, you can see it gave a signal of a buy coming. That buy did happen. You understand? Just like here as well, it gave that big long spike. That buy is coming, buy came. You know, it gave a down dip right here. The sell came in. It's not 100% accurate, but it is accurate as they come. It's just like here as well. So with this one, we could expect that buy coming. So with this one, for example, we can say go, want to buy go Monday, and then exit on Wednesday. So you can hold to Friday. It's riskier. Risk is medium risk, and wait. You want to wait at least 100 pips pullback first. So you want it to pull back at least 100 pips. You want price to open and start going down first before you actually consider going up. And the average from the average wick candle is at least 100 pips. So some ranging around 100 pips before you even consider going into this trade. Okay. Is there any questions about this one? Someone might have not seen the average wick before. Does anyone have any questions? You can type it up if you want. So that's the one we go, right? You can still type up your questions, by the way. I'm just gonna continue because of time. All right. Now let's check other assets. Let's see what CHF is saying. They're giving more sell side. These guys are quite confused on both angles, so it's not pretty much a good sign, because there's nothing to take from these guys. If they're confused, then there's not enough liquidity to take off of these guys. So this might not move the way we want it to. But let's go with what we can still see. So there's 4,000 new position added to the short side, right? Now let's check what CHF is saying. We'll wait for that to load. So with CHF, today's 13. All right, CHF is still pointing all the way up, but the down is pointing on the 17th. I'm not sure if that's this week. Probably it's going to be on Friday or something. Thursday, right? So you can see from the 5 years, according to 2017, and the 15 years, around this period of time, CHF tends to drop. But with the 40 years, there's a consolidation in play. So around 17 and 18, we might actually see a drop. and which these guys are already anticipating. These guys are on the these guys are slightly on the long side, but these guys have more position altogether. 44% of the game is with them, pointing to the short side. Now, by looking at this, it's a good sign. I'm just only skeptical about this consolidation right here. So the entry is going to be between 17 and 18 on this one, for example. So what I'm going to do is I'm just going to load up and check the CHF asset. Okay, CHF. All right, let me see what we can find on the CHF on that day. I'm just going to load most of the probabilities of CHF to see which one might be good for us between 17 and 18. Now, keep in mind, I will still classify this as being a medium risk trade because simply because of this consolidation I'm seeing here, I'm not totally satisfied with it. But everything else seems to be satisfactory, and everything else you can actually quite practically figure out with the average wick size candle. It gives you the average of where you should be considering to go in. You can always set an alert on your MT4 or your trading view to let you know when price gets to that region. If price doesn't get there, just don't trade. Trading is about simply discipline and being patient. So with this one, 17, right? So we're looking at CHF JPY. This already by itself, CHF JPY just eliminated itself out of the game because, you know, this month, June, we're expecting CHF, if I'm not mistaken, to go down. And right here, according to probabilities, I can't remember how many years probabilities this is, but it's quite a long probability years in terms of range. It's pointing up. So I wouldn't really want to go against it. So CHF JPY, I'm taking that out. That's nullified already. So let's check Euro. So in terms of Euro JPY, what we want to look for is strength in Euro. So Euro going up against the CHF. All right. So we do the same thing, come between that 17 and 18. What we can see is Euro is actually going down. So we don't trade that. That also out of the case. So just by simply doing this small thing, it's saving me time to go to my chart to analyze each and every one of them one by one. You know, that's the beauty of the strategy. You just really want to come in. You want to quickly do your analysis in 5-10 minutes and you're done. I see someone probably has a question. I'm gonna come to that in a second. Just hold on a second. Let me just quickly check this. Um, okay. So USD, we're expecting the same thing. No, so that's out of the game. All right. Let me see what the question is. That's a beautiful question. That's actually a very beautiful question. Catchy. Uh, Mukhtar actually taught me this. I never even knew this existed because I used to use TradingView before. Um, and basically, what you want to do is you want to go on a line. You want to go around this region. You want to right click. You want to go on the line, then right click, and it should say. Hold on. Hold on. I'm quite forgetting now. He taught me how to do this now. Hold on. It's a damn thing. All right. Yeah. This is it right here. So basically, let me just move this out of the way. I don't really need this anymore. So you want to right click around the region. So let's say around this region, for example, you go to trading and then you click on alert. Now, when you click on alert, you can see this red line right here. When price gets there, it's going to make a sound on your MT4. So you can always readjust this line manually and move it down. So I'm just going to do that once more. So you're going to do right click, trading, alert, and then it creates it by the right hand side. You can then move that. That's how you do it on MT4. So funny enough, I'm just going to leave that there just in case. So something like that anyway. That's how you do it. Right, with that. Let me change this also. I've seen this. Let me change it back to gold. I don't want to use the wrong asset for this. So that's how you do that. I hope that clarifies that part. So the next one we're gonna look at is CAD CHF. We want to see if we'll get that We want to see CAD going stronger. So between the 17 and same thing happens here. So that's out. So then we go to GBP. Same thing happens right here. Actually, it gives us that buy, but then comes down. I don't want that. I take that out. So CHF doesn't really give me the full stuff. It's looking at a higher risk trade for me. So I probably would just have to skip CHF. You know, as I already said before, there's not that much volatility from the other side anyway. So AED, right? So skip AED as well. SCNZD. I see someone has a question. I'm coming. Just let me just quickly check this, and I'll get to that. So yeah, so with the NZD as well, it's pointing down. So probability is giving me the sign that CHF should be getting stronger. Okay, yeah, that's beautiful. Wasn't a question. So probability is giving me a sign that it's going down. Now COT is giving me probability is giving me the sign that CHF is going to be strong actually, but COT is giving me the sign that CHF is meant to be weak, and seasonality is giving me the sign that CHF is meant to be weak as well. So for that reason, I would just stay away from the trade. I mean, this move might happen, but to be safe, I'll stay away. What I can do is when price gets here, let's say sometime around here, for example, on the 23rd, I can come back and check on it, which is should be next week, and see that time that everything aligns. Just for that little move that it aligns for 3 days, I could come and capitalize on that move. So that's 10 days from now. So I can come back next week and maybe everything realigns that point in time. Let me check JPY. Let me just see what's happening with JPY, and then I'll check CAD. I don't know. CAD just popped into my mind right now, so I'm just gonna check. I want to see what's happening with JPY, then I'll check CAD. So JPY is popping down, which is good, but these guys are not putting position, so volatility might be low. Um, right, CAD, there's much position. So CAD, if anything, they're taking out positions from two sides. I read an article just I think yesterday. I actually saw the headline and saying CAD might be the new kid on the block or something like CAD probably is getting stronger or something like that. But according to this, though, one thing you have to be careful is when mainstream media are talking about something that this is the best thing around the block, or is it's gonna pop very soon, or something's gonna happen to it. Stay away from that asset. So they've been talking about CAD on some articles, and I've been saying that, but from what I'm seeing from the COT report, it doesn't really look good for the CAD anyway. So JPY looks good. They're going to the downside, but these guys are not playing. I mean, these guys are not really playing that much. But let's see what the seasonality has to say with JPY. All right, so on the 13th, which is this 14th is tomorrow. So on the 17th, JPY might be a little bit more playful on the 17th. Might come out to play on the 17th. So what I'm gonna do is I'm gonna quickly run through the probability for JPY on that day because it's already on the sell. Anyway, so let's see. We've checked CHF, JPY, and if I'm not mistaken, uh, since we want JPY to be weaker, we're expecting it to be weak on the 17th. We might actually have an asset to trade with CHF, JPY, even though we know CHF is also meant to go down. You know. So with this one, for example, CHF, JPY is giving that 2 days for a buy, and then that buy. So I mean, this is slightly risky because two of the assets are pointing in they're pointing in a very different direction. They're pointing in the same direction actually. CHF is pointing down, JPY is also pointing down. So it's kind of slightly risky because you don't know which one is actually going to go the one way or the other. One of them have to actually go down. So this is where a technical comes into play. I mean, looking at this from technical, this has been climbing up for a while, and right here it's done a double top right here. By looking at it, you see a double top. So there's a possibility that price would actually come back and get a support right here, or go to 50 for support. With this one, I want to be very careful. I don't even want to trade this because whenever I see an asset that's already going up, I don't want to catch a trend that is already moving. I want to catch it somewhere at the beginning right here, or just around here, or maybe at the pullback right here, but not here. That being said, this asset might actually do go up, but by looking at it barely, even though the COT report is pointing in that direction, and what's it called? The seasonality is pointing in that direction for JPY, but also pointing on the weakness of the CHF at the same time. So that's already made it slightly more risky anyway. And the probability is pointing on it. I will still tend to ignore this because of it's not in full alignment. I might come back on Monday when I see a momentum going up, then I'll go into it. But if not, I'm just gonna ignore it. Okay. So with that one, I'll just let that asset go. So the next thing is, let's see USD CHF. No, not CHF. We're actually checking for JPY this time around. So let me see. So JPY, USD JPY. Let's see. If USD gives it strength or Euro gives it strength, I would more likely trade those assets compared to trading the CHF against it. All right, let's get that load up. All right. Probably just have a time for just this entire analysis, and probably take questions if anybody have questions, and then we'll wrap it up. So we're looking at between the 17th, right? So it doesn't really it looks good on the 18th, right? So this is actually this wants us to hold it over to next week. And let me see, 17, it's meant to drop. What about the 18th? Yeah, 18th also. So that looks good. Let me just quickly pop over to USD. Just want to see what USD is doing, just to make sure that USD isn't pointing down also at that time. Normally, I can actually ignore the fact that even if USD is pointing down, you understand, that during that period. So we're looking at the 18th. So luckily enough for us, USD is meant to take off around that period anyway. It's taking off on the 19th, which is the weekend, up until the around 25th and 24th to 26th. So that's good. And just to make sure that I'm being extra careful, what I'm going to do is I'm going to check the COT for USD as well, just to make sure that things look a little bit more brighter from my side. Now, from what I can see here, this doesn't give me any real direction. But then I can look at these guys. These guys are banking on USD to go down a little bit more. So that's good enough indication for me that I should go against them, right? So, and I can also check this. This is flat line. The commercial are just flat on it, so it's not that bad. This enough is good enough indication for me. No, I don't normally go through all of this thoroughly, but I want to be very extra careful because of the market is acting weird sometimes. Uh, you know, around last week. So, yes. So that signifies with the USD JPY. I can see that USD says it want to take off on the you know on the 18th right here. So I can do that with the JPY in contrast to the JPY up until it says 23rd. Now let me check. 23rd. 23rd is there. So I can actually go in on the 18th, come out on what's it called, on the 22nd. So with USD JPY, let's use USD JPY instead, right? USD JPY is right here. All right. Cool. Let's just check that. So with USD JPY, we want to go in on, just quickly revalidating it. They want to go in on 18th. Right now, I can't really say specifically where the price is going to be on the 18th, but what I can see is price has already been consolidating, and the first region that popped up into my site is right here. Now, the main reason I can't use the average week candle in this one, I think someone has a question. I'll come to you in a second. The main reason we can't use the average week candle is because it's the middle of the week. So what I can do is on a Wednesday or on a Thursday, I come back to this asset and look at the buy candles and calculate their average. Then on that Friday, that's when I'm going to use it. But barely looking at this, I can tell most likely price is going to come to the 50 moving average, because look at it right here. Price tried to break the 50. It couldn't. Left it, came back to support again, and it's most likely going to get a support this time around from it. I mean, I hardly draw trend lines, and when I do this stuff, I do like trend lines, but I just hardly use them anymore. So the way I do my trend line is slightly off compared to what people do. I used to trade binary option before, so I used to use this. But from what I can see anyway, I'm just trying to find a nice trend that might work. I mean, it's gone from point 0.1, point 0.2, point 0.3. This is already broken. It's already broken in my own regards anyway. Some people don't classify it as being broken, but I want to see if I can find another trend that might be in play that I might have not calculated. So this is played out nicely. This is already broken. So there isn't that much trend left to play right here unless we use perhaps this one. And this is literally practically broken. So yeah, I can't find a trend at the moment. I mean, I have to sit down a little bit more with it and look for it. I might find a trend. DXY, we can check DXY. I mean, what are you talking about in terms of seasonality or just the chart? If it's just the chart, we can check DXY on the chart. That's not that's not distant. It's not a big deal. I think we can check that. But in regards to are you talking about seasonality? Basically, um, uh, okay, GBP, USD, AUD, USD, and Euro USD. Well, you've seen a push there. I mean, DXY and gold kind of do the inverse anyway. So if you just look at what's happening with gold, you're most likely gonna figure out what's happening on DXY. All right. Trying to get my sound card back. Okay. Sound card disconnected for a second. Apologies. Thank you for letting me know. Catch you. Right. I don't know why it keeps disconnecting. Some M audio at sound card and it just keeps doing that every now and again. So yeah, I mean, with the DXY, I can try to look for you know the chart of the DXY. You're talking in terms of seasonality. We could try to get the seasonality of DXY if the data is available. And see, how it is. But because we don't trade it directly, we trade the futures of USD. So all of this is just the futures, and the future seems to work a lot more better, in terms of predicting where the asset is going to be. That's why we don't really have them in pairs. I mean, we do have some in pairs. We stopped doing that because the futures tend to give us more directional pattern compared to what's it called, compared to the pairs. For example, like if we check the Euro USD, I think you mentioned that also into USD. No, yeah, Euro USD on what day did you say it was? On Thursday. I was quickly gonna reload my which is in the 10. Let's see what that says. I mean, you can see with this one, it's all choppy and messed up. It doesn't really give us a clear indication of what's going on. Yeah, from what I can see on that Thursday, yeah, it's just the lag. It's probably the lag that you're seeing. Is this data, this entire, if you had a skip in the asset, and it's most likely a lag of this data, 2-day lag, and then probably just collapsed. Let me actually look at it because, before I forget, let me just draft this down. This is another trade to take. So USD JPY. So we are buying, I think we're buying, Wow, I didn't even put what we're doing on gold. I think gold is also a buy, if I'm not mistaken. So we're buying on Friday, exit on Tuesday. Tuesday, okay. Right. And you just want to wait at least a 50 moving average or around this zone right here. And just put that as an alert for myself as well. Maybe start using it a lot, so I don't need to do all of that. So just around that region. Let me verify. I'm going to come to USD JPY, Euro USD, and then let me quickly just verify the gold for 2 seconds. What we're doing on gold again, because my mind literally just skipped what we're meant to do on gold. Um, then I'll look at the pairs with the Euro USD and see what you were saying, Mr. Abiodun, about it. All right. Yeah, we're buying gold, right? If I'm not mistaken. Yeah, so it's medium risk. Well, we're buying gold on Monday, which is 13. Yeah. So gold is also buy, right? So so those two for now. We don't have much time to go for to check it a lot more. So with the pairs, for example, with the ones with the pairs, yes, you can definitely use you can use the seasonality to depict that. But as I said, like I tend not to use it by itself. It's accurate to a degree, but you don't want to use it by itself because history repeats itself, but not every time. Sometimes there's a change, so you have to kind of mix it. If the COT is not giving you a direction, like let's say if the COT report is giving you not doesn't know where it needs to go, then yeah, and then the probability is also giving a 50-50 chance, you can most likely expect the consolidation within that region. It's just exactly the same thing I predict the buy or sell. All you just need to do is make sure everything aligns and you're good. So I'm just quickly going to check this. On the 8th, we should have a dip on the Euro USD to about the 14th. And if we look at uh, this, yeah, so on the 8th, it actually started bang on time. That dip happens, and that dip is meant to happen to on the 14th, which is tomorrow. So Euro USD should start going back up. That's what happened to the Euro USD and probably to the DXY assets. It's just following the seasonality that is in play. So as you can see, the Euro USD seasonality shows that dip, and then you should expect a kind of a pullback at this point on the 14th, which is today. So that's another one. But I mean, we haven't done COT report for this or probability for this. So I can't really say you should go into it, but it looks like it might actually then go back up again for a little while to probably on the 19th or the 18th or the 17th at least. So from tomorrow to the 17th, so 4 days straight, you might actually see that Euro USD go back up and probably hit back somewhere around here. So guys, that literally sums it up for today's webinar. I know I'm out of time and I would have loved to continue, but I just want to keep it very short and sweet. So these are the trades we're looking at. I'll help you take a screenshot of that. And thank you for attending and God bless you all, guys. Take care of yourself.